Students, let us try to understand the concept of depreciation with this example. The trial balance shows the value of furniture on 31/3/2014 as rupees 1 lakh. Furniture is to be depreciated at 15%. So the question says the furniture value should be reduced by 15%. It means they want to reduce the value of furniture because of some reason. What could be those reasons? The reasons can be: 1, because of usage; 2, it can be because of lapse of time; 3, it can be loss in value of asset in the market. See, the usage will create what? Usage will create wear and tear. So the asset may not give the same amount of benefit in the coming days. And lapse of time, sometimes since because time has lapsed, the asset will lose its value. Simple example can be purchase of car. Let us purchase a car, we'll use it for 1 year, or even don't use it for 1 year, keep it idle for 1 year, then sell, it will have, or it will fetch only a lesser value in the market. And third, loss in value of asset in the market itself. The product become obsolete, the product become outdated. So even if your product is new, even if it is generating some use for you, it may not fetch value in the market. So for these reasons, not only the furniture, any asset can lose its value. So we generally term them as depreciation. So what is depreciation? Depreciation basically means reduction in value of asset, not confined to particular asset like furniture. It is a reduction in value of asset, and this reduction should be accounted in the books. And how it will be accounted, we'll see. Depreciation will find place in both profit and loss account, number 1, and it will also find a place in balance sheet. Why it should find a place in profit and loss account? Because depreciation being loss in value of asset, it should be captured on the expenses side of the P&L account. So on the P&L, it will find a place on debit side or on the expense side as to depreciation. And it will also find a place in the balance sheet on the asset side. See, in the balance sheet on the asset, particular fixed assets will be shown, and this depreciation will be shown as reduction or deduction from the fixed asset. So it will be shown as less depreciation from the particular fixed assets. So the accounting effect is, it is debited in P&L account and credited in the asset account. Credited means reducing the value of asset. Asset will always have debit, so when you credit the asset, it will lose its value. So accounting entry is going to be simple. Depreciation being loss, we have to debit, so depreciation account debit. And why we are debiting? Nominal account rule says debit all expenses and losses. So depreciation account debit, and we are crediting concerned fixed asset because fixed asset will always have debit balance. By crediting, we are reducing the value of fixed assets. So to particular fixed asset account. So this is the accounting entry that will be passed. Now we'll have a look at the example. Our example, furniture is 1 lakh and depreciation is 15%. So 1 lakh and 15% is going to be 15,000. So depreciation is going to be 15,000. Depreciation account should be debited by 15,000, and particular fixed asset account, in our case it is furniture account. Furniture account should be credited by 15,000. So we will see the accounting effect in P&L and balance sheet. In P&L, we will find on the depreciation as 15,000, and in balance sheet the effect will be, instead of fixed asset, we will have it as furniture. And what is the value of furniture? The value of furniture as available in the question is 1 lakh. So it's going to be 1 lakh, and from this 1 lakh we'll deduct depreciation on furniture, which we have calculated, which is 15,000. So net is 85,000, and this is the written down value of asset. Means we have reduced the value of asset by writing depreciation. Thank you, students.